Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and the focus point clearly is gold, where we have seen all-time highs in many sessions now. But interestingly, it also is a lot of buying trends that we see in gold, especially when it comes to retail side of the Indian markets. Let's put focus on that, and for that conversation, joining us now is Vikram Dhawan from Nippon India. Vikram, thank you so much for joining us. First of all, on the gold prices itself, because it's at all-time highs, with markets believing that we haven't really done the bull run yet, and this year could show higher highs. What's your sense? What are the factors you are watching, and how are you looking at the gold prices ending this year?
Thank you very much, Manisha, for inviting me on your show. I believe last time you invited me on this show, gold prices were close to about 1800. And what has happened in the past 6 months is that there has been a bit of a reversal in fortune for gold. I mean, the October low happened because there was weak physical demand. There was selling by momentum funds, by quant funds, hedge funds. We had the ETF outflows continuing, and there was still uncertainty about the interest rates, dollar, and inflation. But fast forward to March 2024, we have a bit of a Goldilocks situation as far as gold is concerned. We have very strong physical demand led by China. Indian demand, despite the higher prices, is fairly resilient. You have the funds, the momentum, quant, and hedge funds back buying gold. Well, ETF is a bit of a disappointment. ETF flows outside India continue to be negative. And last but not the least, you have the headwinds which were present in October, macro headwinds like inflation, interest rates, and dollar uncertainty that seems to be easing or coming in favor of gold. So I think gold has emerged from a very hostile environment in the past 2-3 years, and the stars may be aligning for gold. But obviously, there will be short-term volatility, there will be medium-term moves and long-term moves. So I think investors need to be careful about it.
Well, absolutely. There's a big volatile move that we've seen in gold, and too much too soon of a run up in the higher side as well. Let's talk about the Indian markets then. And yes, there are more revenues than what we had 5 years ago, perhaps, or 7 years ago. How have you seen Indians mature and treat gold as a financial instrument?
See, globally, gold remains under-owned. I mean, if you see the global ETF AUMs, they are almost at 5 years low. Outside North America, we have seen positive flows into gold ETFs, but North America has, for obvious reasons, has not been too much, allured by gold ETFs. But they've had very strong physical demand. So yes, I think the Indian story from here on, as I've been mentioning earlier, also is more of a portfolio diversification, multi-asset strategy. That will be a very strong driver of flows into gold. There will be direct flows as well, but I think as the market matures, as the size of the portfolios increases, investors may want to, increase their risk-weighted returns, and gold is one of the securities you can have in your portfolio, which takes care of it.
When you talk about the gold funds and gold ETFs for that matter, how would you look at both of these products, and where do you see more interest coming from Indians?
So I think the interest is more on ETF. The fund of gold saving funds remains sort of, I would say, underappreciated as of now, because I think gold fund of funds, or gold saving funds as it is called by various fund houses, is some place where you can do an SIP under SEBI registered mutual funds and all, with all the safety and checks and balances. But we are also seeing very encouraging flows in the multi-asset category across the industry, across the various fund houses. So I think it's going to be a mixed bag. ETF flows direct, which may be slightly more tactical, but I think whatever allocations you're getting through multi-asset funds in the industry or fund of funds, they tend to be more stickier.
So gold ETFs, and let's talk about that. And we do know that gold in last 3 years has given positive returns there, and the run-up that we've seen in this year is something that's luring more and more investors into the market. But when it comes to gold ETFs and the kind of holdings that India has, while has surged up, but relative to what the global markets do in sense of gold ETFs, we still are relatively small, would you say?
Yeah, that's very unfortunate, because the gold ETFs have been now around since 2007. And one would have thought that, in a market which consumes gold worth of 2 to 3 lakh crores every year, at least a good part of that should have been in gold ETFs. Why it has not happened is because obviously we are sorry for that. We are obviously a fast-growing economy, and the lure of equities is obviously there as far as investors are concerned. But I think as the cycles mature, as the markets mature, I think the inflows into gold related products which have gold ETFs as the underlying or physical gold as the underlying would increase. Also, one thing you need to note is that we've had the removal of tax benefits as far as gold ETFs are concerned. Now, what it does is that if you look at rest of the world, gold ETFs are source of huge liquidity in the gold market, physical gold markets across the world. I mean, for instance, in US, throughout COVID, you had flows and outflows happening to the tunes of few hundred tons, which provide liquidity and sort of a price discovery as far as the local market is concerned. So I think then there need to be some sort of an encouragement from the from the establishment, from the government for this product, because at the end of the day, this will ensure that not all the gold which is being bought, most of it is being bought in physical terms, ends up either in lockers or under the mattress, but it remains in electronic forms, and it is out there which is liquid and can be utilized for various things, especially creating liquidity in the local domestic market.
Absolutely. Vikram, so I know gold prices have run up a lot, but there is still an expectation that we are going to look at higher highs from here, including you, as you just said. So if there was somebody who wanted to start investing in gold now or hold on to positions, what would your advice be? How should one start? How longer term should this investment be?
See, I think one thing which the investors need to, note is that gold tends to perform well at times of extremely high volatility in risk assets like equities and credit, etc. Obviously, it also tends to perform well during geopolitical events or black swan events or economic, turmoils and recession, etc. So it is a sort of a hedge. So I think if you are an investor into the capital markets, into equities or debt or other risk assets in the capital markets, and I think you need something which will be shining when the chips are down. So I think gold does that as far as the the portfolio diversification, portfolio hedging is concerned. There, I think investors can either opt for multi-asset allocation funds across the industry, or they can do the portfolio diversification themselves, depending upon what kind of risks they are holding. If they are too much skewed towards equity, they may need slightly larger amount of gold allocation. But if they are too much skewed in towards debt, fixed income, then they may need slightly lower allocation to gold. So I think these are the things which the investors need to keep in mind. Also, don't forget the option of SIP. I mean, we talk about SIP in equities and debt, but don't forget there is an SIP available in gold as well.
Vikram, one final question, and this is a market which is very away from textbook, where we've seen equities run up. We're looking at dollar index holding above 100. Gold is running up as well. Bitcoin is at an all-time highs too. What would give away first, and how would you look at various asset classes playing out?
So I think that next, it's very clear that if you analyze historical data, the next big leg for gold will come once there is rotation out of risky assets like equities. It's very difficult to predict when that's going to happen and at what scale. But I think the gold market may pan out this year in two ways. Either if the rotation happens earlier than expected, what the market is expecting, then you may see fresh highs before consolidation. But I think if the rotation doesn't happen in the near to medium term, then you may see consolidation and then market going up towards the end of the year or next year. So that's how I think the gold market is looking as of now.
All right, but this way or that way, you are looking at higher gold prices, and that's quite assuring for people who would want to invest in this particular asset class. Vikram, as always, thank you so much for making sense of all things precious metals and, of course, the other asset classes as well.